Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. My apologies for some of the labels appearing in light green on my daily chart. My charting system occasionally decides to throw a tantrum, and this is one of those occasions. Late last year, a few bullish patterns started to emerge that eventually led to a move up towards the combined resistance in mid-December last year, made up from the November 2014 high at 201.35 and the 50% Fibonacci line of the February 2022 to January 2023 move at 201.70 plus. I suppose you could also throw in the declining neckline, currently 199.60 of the April to May 2022 reverse head and shoulders pattern. Between them all, the market rise was halted and turned back down through the imperfect and now broken bull channel, and the market eventually stopped down at the combination of the congestion around the 50% Fibonacci line of the May 2019 to February 2022 move at 174 even, and the August 2021 low at 174.5, all done by the middle of January. Since then, prices have moved sideways within a wide 177 even zone to 195 even area until the start of April. During that time, the market had been fed ammunition from the important 50% Fibonacci line of the June 2020 to February 2022 move at 177.45 and the nearby rising medium moving average highlighted in mauve on my daily chart, and that's currently at 187.15. This moving average tempered the bearishness and then supported the move higher to break higher through the neckline, through the 50% Fibonacci line at 201.70 and the April 2023 high at 204.90, up through the October 2022 high at 216.25, until last Friday's prices reached up to the October 2014 high at 229.15. As I said about the start of this move last week, and I quote, "From this we can learn that possibly, just possibly, the October 2023 to date action could be seen as one leg up, then a wide hesitation, halfway hesitation as such, and we are now onto possibly the second leg. The question is now, how far up are the opportunities for such a pattern? I would suggest if we do go down this route, then the 219 even area would be a first possibility, with further opportunities up as far as the 228 to 230 area. I'm not setting any potential targets as yet, purely because the break higher hasn't been so new, and I would like to see at least another week's worth of data to clarify my thoughts topside." End of quote. Well, it all happened so quickly that I could not set up targets, but the market has managed to reach them. The primary target in the 219 area, and the harder to reach secondary target up in the 228 to 230 area, which we saw on Friday. So what now? Well, I took a look at the longer term charts here, and this is the key move here. Yes, this key move here was over the 50% Fibonacci line of the 2011 to 2019 move at 198.30. This has seemingly validated the action since September 2022 to date as possible double bottom Adam and Eve type. Thus, potential targets for such a pattern topside would be a primary target in the 235 even area, with a secondary harder to reach target X2 up in the 251.60 area. These are early days, but that is what it's looking like right now. London coffee. During the process of the market breaking higher from back in December last year, prices started to stabilize for a while, right on the 50% projected Fibonacci line at 30.84. However, though this 50% projected Fibonacci support did not last, it did start a process of stabilization that ended up with a late January 2023 to early March 2024 bullish halfway hesitation pattern between roughly the lesser Fibonacci congestion at 30.16 and 30.18 and that's up to the January 2024 high at 32.61. As all this was happening, 7 weeks ago, we had the short medium moving average, currently at 33.06, highlighted in green on my daily chart, enter the frame and turn prices higher. In the process of making this halfway hesitation, the late January to early March action also became a small bear channel, come declining expanding wedge pattern. Now personally, I favor it as a wider bear channel. 6 weeks ago, in the middle of the week, prices shot up through the upper bear channel line and stabilized over it. And then, taking its time, the market started to exploit the upside. As I said 3 weeks ago, and I quote, it nevertheless still lays out all sorts of possibilities topside. Thus, if we really look at the bear channel as a bullish halfway hesitation, then we need to look at 2 points from where to start measuring. The first is the January low at 27.44. The second is from the mid-December 2023 start of rally in the 25.20 area. Thus, for the first pattern, we would have a potential target X in the 34.80 area, whilst from the second origin you could see up as far as a potential target X1 in the 3700 area, well up and off my daily chart. End of quote. A few days after my commentary, target X at 34.80 was reached, and 2 weeks ago the harder to reach target X1 not only appeared on my daily chart, but was also achieved. All this action allowed me to draw a new pattern, the bright red late November 2023 to late February 2024 bullish Andrews pitchfork. The market seems to fit well within this pitchfork, but it hasn't really done much to verify it other than to see it exist. We are right now between the middle tine below, currently at 37.21, and the upper tine above, currently at 40.17. I suggest, as I did last week, to pay close attention to this pitchfork going forward. Other than that, we are just now, today, testing the next 100% Fibonacci line nearby at 29.43. with the next one beyond that at 40.81 at the moment. Meanwhile, below, we have a congestion of projected Fibonacci lines in the 37.59 to 37.69 zone, with some mild congestion a little further down between roughly 36.60 to 37.10.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.